My name's Carrieanne. I'm a branch manager for Piedmont Advantage Credit Union in the Charlotte area. I have been in the finance world for about 10 years. I came to finance from a very different perspective. So I worked in women's clothing for a number of years and decided that I wanted a change and did some volunteer work in my local community, teaching basic financial literacy and basic financial information to different groups. Found that was very rewarding and decided that I wanted to make a career out of it. So that is kind of how I came to the financial world. I worked for another credit union down in Columbia, South Carolina for a number of years and moved to North Carolina. And when I started researching credit unions, because I'm a firm believer in the credit union movement, I found Piedmont Advantage, was actually recommended to me from a friend, somebody who worked with us. And again, family history. I have family members that worked for the U.S. Airways Piedmont kind of time frame when that merged. That was how we came to Winston-Salem, so I've always been familiar with them. My mom's been a member for a number of years, going back to when I was little. So it's a nice full circle moment when I actually took the position with Piedmont Advantage. I want people to be in a better place than maybe I was when I was younger. So I made all of those terrible financial mistakes that the pitfalls, I fell into every single one of them. And so my perspective, or my professional approach in both branch management and financial counseling, is I want to kind of tell you the things that I wish that someone had told me when I was younger. We've all been 19. We've all not made the most prudent financial choices. So if I can explain on the front end, maybe educate is a better word, or give the information on the front end to say this is what this means, and managing your credit is this, or making the minimum monthly payment every month on a credit card or a loan payment or whatever, making sure that that's made timely. That's going to be 35% of your credit score. And that's the one thing that on a day-to-day basis, you can affect your score most effectively and get you the biggest bang for your buck, if you think about it that way. But if I can give those little tips and tricks to make it very user-friendly and manageable and understandable, that's kind of what I try to take these big financial terms and financial jargon that we have in this environment that we're in, and try to break it down into real world, both stories, examples, real world terms, because again, fiscal literacy or financial literacy, these are all just big words. How well do you manage your finances? Do you sit down and fill out a checkbook do you know what's in your account? Do you know when payments are going to be due? Do you know when your paychecks hit versus when your bills are coming out? If you have all those things worked out in your head, or even better yet on paper, you're going to make better decisions, and you're going to be in a better position long term. The areas of financial counseling that I enjoy the most are that initial conversation with the member. Because here's the thing, you need to understand where you're starting before everybody comes in with an idea, like I want to get to this place. But you can't create a path to get there until you know where you are. So my favorite part is when you meet somebody for the first time. It's usually a little emotional because people have a lot of emotion attached to finances, whether we realize it or not. And you meet them where they are, you spread it out on paper. It's not always a feel-good moment because there's a lot of guilt and shame and uncomfortability and disappointment, resentment that I'm in this place. But again, you have to know step one has to come before step two, or you have to crawl before you can walk. So basically, by meeting people, having that conversation, seeing where you are, seeing you tell me kind of how you've gotten to this place. I'm going to be your biggest cheerleader. We can certainly create the plan together. We're going to move forward together. But we have to know where we start. And to me, that's the most, it's the most exciting part, because again, it's about telling me your story. Because again, we all come to this place when you make that initial conversation, or you make that initial meeting. You want to know how people got to that place. So it's getting to know the person. It's getting to know good decisions, bad decisions, their families, their career choices, college choices, all of it all tells you a little bit about that person, but you get to see that kind of the whole, that's that first snapshot. And then you get to kind of go on from there, and you get to learn and grow together, because again, you're kind of along on this ride, because you're a part of it. But it's really about meeting that person where they are, and just getting to know, kind of uncovering the layers, or peeling back the onion to figure out where do we start, and then how do we move forward. One of my most memorable experiences with a member was someone that I met. We did a loan application for him, and unfortunately the application was denied. So we kind of dug into the reasons why. We looked at credit report, we looked at income, we looked at a lot of different things. And during that conversation, which was a difficult conversation, because obviously he was disappointed because the loan was not approved. But in that conversation, we talked about what his future wishes were. So he told me that at one point in time he wanted to buy a house. So we kind of started to talk about the things that were holding him back from that and what he needed to do. And we kind of set a plan. This is before I was actually a certified financial counselor, but it was just kind of it was almost the roadmap to kind of help me get there, if that makes sense. So we met, and we kind of set this plan up where every 3 months or so we would touch base and see how things were going and checking in and that type of thing. And it took about 18 months, but he got to a place where his credit score, which was not going to qualify for any type of mortgage, got to a place where he was actually ready to qualify. And we had the then conversation about what documents he needed to pull together. And my favorite little snapshot of this particular story is the day that he called me and told me that his mortgage had been approved. He was pre-qualified for that home that he had wanted to purchase for such a long period of time. But again, it was it was the process. It was, me encouraging and giving him kind of the laying out the path, laying out the plan, and being realistic and honest with him about the front end. Like, these are the things that have hurt you up until this point, but they're very fixable. We can make progress with this, and we can do this. And again, I'm a resource, so anytime you have a question, call me. And there were a few questions that popped up here and there, but every 3 months we would touch base, just to make sure that he was on track, and do that. Hey, how's it feeling? How's it coming along? How's the debt to income ratio? Like, those kinds of things. And we talked that through. But that day when he was approved was just really, really the high point. It was really exciting. To try to keep up to date on financial news, financial ideas, things of that sort, it comes from all different places. I mean, there's news articles, there's online articles, there's different websites and I think everybody has a great perspective. And I think what my job, or the way that I look at my job, is I read everything or a lot of it, but I need to be able to kind of clarify and simplify, because you can very easily read a lot of these articles, and again, you get back into the financial jargon and these different things. But on a day-to-day basis, that's not usable information for everybody. So it's, how do I focus on a concept, and how do we clear out the clutter and just make sure that this is the true message that you need to understand. So, understanding stock markets and understanding retirement planning and all of those are all very, very complicated topics that change on a day-to-day basis. 1 minute is this, and the stock market's up, the stock market's down. Like, how do you for the day-to-day financial consumer. You have to understand kind of their age, where they are on the trajectory of life, where they are in their life cycle. You have to adjust it. So I don't look at the stock. I mean, I would pay attention to the stock market, don't get me wrong, because I'm going to have to field questions about that I have to be aware of what's going on. But on a day-to-day basis, I'm going to have a different answer for somebody who's 60 versus somebody who's in their 30s, because it's the understanding the trajectory. And even if you're 60, that doesn't mean that you have to pull out of the market. You still can be involved in the market, because you still want to show some growth, and you still want to you want your money to work for you. You've worked so hard for so long for the money that you have. You want it to continue to work for you. But it's being able to kind of clarify that and really simplify it in ways, because again, it's so easy to just get stuck in the muck of this person has this take on it and this person has this take on it. It's really about getting a lot of different perspectives and kind of cleaning it up and just making it very as clarified as possible. If you're looking to improve your financial health, there's a couple of things where you need to start. So basically, number one is, do you have a budget? You have to have it can be written on the back of a cocktail napkin. It can be written on the back of an envelope. It doesn't have to be some specific whatever, but just make sure, do you have a realistic picture of the money coming in and the money coming out? And that includes gift purchases and things that don't necessarily happen on a monthly basis. Your car insurance, you may pay that once every 6 months, but do you know what your amount that you need to budget each month, so that when that 6-month time comes due, you've got that money aside? Car taxes are another example. They come once a year, but if you take that bill and divide it by 12 and know that that's part of your monthly budget, there's no surprises at the end. So that would be the first thing. Second thing, I think, is to make sure that you have money that the concept is called pay yourself first, money that you specifically set aside for savings. And that is money, whether it be building up your emergency fund at first, or money that is just sitting there as rainy day fund, however you want to phrase it, but it is something that is just as important on the priority list as a car payment, a rent or mortgage payment. The amount that you decide that you're going to pay yourself first, or pay yourself for your savings, has to be number one on the priority list, because otherwise, if you wait and just say, I'm going to save what's left over, you're never going to have anything. It has to be high on the priority list. It has to be just as important as those monthly bills that if you don't pay your electric bill, you don't have electricity. Well, if you don't pay yourself first, you have no savings. Those two have to be the same level of importance. They just have to be just as important, high on the priority list. I think the next part is to just be realistic about what your debt to income ratio is, and knowing what your credit utilization is. If you choose to use credit, be mindful of what those numbers are. Ultimately, you want that number to be under 30% of your utilization. So the amount of credit that you have extended to you versus what you currently owe, that if you divide those two numbers out, you want that number to be under 30. But here's the thing. If you start and the first time you do this exercise, you're at 80%. If I tell you, okay, get to 30, that's just overwhelming. So you have to be able to set that up and say, okay, if I'm at 80% right now, not where I want to be, but you know what? How long in the next month can I get to 75? And after that, the next month, can I get it down to 70? But it's all about knowing how to manage those numbers and be realistic about what those look like on your specific budget, and how you can affect those. And then I think probably the final step would be making sure, no matter how old you are, the earlier you start, the better off you are, is for saving for retirement and planning for your future. Retirement is one of those things that nobody has a crystal ball to know what we're going to need and what the time frame, when it's even going to start. So we have to be mindful and take advantage of every opportunity that you have. If you have 401ks that employer do matching, please take advantage of that. The earlier you start, compound interest is your friend. It will help you in the long run. These are concepts that are really simple. But again, you have to, when you're 20 or 25 years old, you don't necessarily think that I need to save for retirement right now because it's so far away. It comes much faster than you realize. And by starting early and putting some money away, one, it gets you into that habit of saving for your own future and paying yourself first in a different kind of way. But it helps you so much in the long run. You can really grow your nest egg very easily by starting early. So one of a fun fact about me, or something that wouldn't necessarily be expected, would be that I'm a NASCAR fan. I've been a NASCAR fan for years, and that started when I was in high school. So my very best friend was her stepfather had a tiny little race car that he was his own car that he built in his own garage, and every Friday night we would spend the night at the track watching the car, watching her stepfather run in the race. And if he made it to the big race and didn't, got out of the consolation race, it was a big night for us. But that's just one of those things that, to me still to this day I enjoy, and it's just something that I don't think that people would expect me to say. Kind of different.